Good afternoon, ladies and gentlemen. My name is Hlib Vyshlinsky. I am the Acting Director of the Center for Economic Strategy, and I'm pleased to welcome you at this first in year 2023 economical overview of Ukrainian situation during the wartime. We're really grateful to all of our partners, our media partner, Ukrainska Pravda, and our partners that we really have this opportunity to do all of this overview together with our team, with our colleagues from Berlin economics team, and we are keep on holding on with our format that you already were aware of on a monthly basis. We're going to be doing the big presentation every month. We've had done this text briefs before, but we're going to have a big presentation that's going to be available in Ukrainian and in English at our website, as always. And except for the presentation, we're not only going to discuss what has changed in Ukrainian economy for the passing months, but we'll also have an open discussion with the professionals of the sector. So today's discussion is going to combine the two important topics. The first topic is going to be of how to provide a renewal of Ukrainian economy when we know that the war can take a longer period of time, and it actually can take a longer period than we expected, and how it's going to influence the economy and the monetary policy. We understand that under these tough conditions of the wartime, this should protect Ukrainian businesses and Ukrainians from the uncontrolled increase of prices, but on the other hand, it should also create additional conditions for the economical growth. So this is going to be our main topic for the discussion today, and I'm going to introduce you with the participants of our discussion later on after the presentation that is going to be conducted by my colleague from our Center of Economic Strategy. But first of all, I would like to pass the floor to Garry Poluschkin, who is our partner from the German economic team. So Garry, please, the floor is yours.
Thank you very much. Warm welcome from Berlin to all participants of this webinar on today's presentation of the monthly review of the Ukrainian economy by the Center for Economic Strategy. It's a great pleasure for me to, as a project manager for Ukraine of the German economic team, to introduce this webinar as part of the continuous cooperation between the Center for Economic Strategy and the German economic team. The German economic team is an economic policy advisory project financed by the German Federal Ministry for Economic Affairs and Climate Action and has been active in Ukraine for more than 15 years already. I'm very glad that so many interested listeners and participants will join, because this webinar can bring together stakeholders from Ukraine and from abroad to analyze and to improve the economic, financial, and social situation of Ukraine facing Russia's full-scale war. This format provides an important opportunity to discuss the state of the economy, which is a regular part of this event, as well as an outlook on monetary policy. So I'm very interested in learning more about the outlook on, for example, inflation expectations, current account and exchange rate policy. And I'm very delighted that the Center for Economic Strategy has invited such high-ranking policymakers from the Ministry of Economy, from the National Bank, and from JP Morgan. I'm very looking forward to a fruitful discussion and giving back to Hlib and the Center for Economic Strategy, who will host today's event. Thank you.
Thank you, Garry.
Thank you, Harry. And I would like to pass the floor to my colleagues today. We're going to have a representative of our center. We're going to have 3 colleagues who are going to be presenting on behalf of the center. And we're going to pass the floor to Dmitro Godunov, our senior economist and analytic, who's going to be presenting the overall trends of economy and the main sectors with that. So please, Dmitro, the floor is yours. Good day, dear colleagues. Can you see my presentation? Can you hear me well? Yes, we can see and hear you. Okay, so we'll start with a very brief military update. That, yes, unfortunately, it's really hard for us to provide a counter-offense without the harsh armor, and even though it, we see that the front line hasn't changed, and unfortunately we have been promised to have the new armor, more rockets, more tanks, even when we're talking about the air support as well, and we have been promised to have more and more new types of the security system that is going to help us to provide the security all over Ukraine and the energy sector that has been the main target for the last months. Talking about the macroeconomical trends, the downfall of the GDP last year has been on the lower level than has been expected the year before. That was up to 30%, but still it has been the deepest downfall in the history of Ukrainian independence, and we have already seen that there are some certain expectations of the growth of the GDP, and the National Bank does not expect the growth of the GDP, but the private actors, there are some expecting the growth, some expecting the decline. So, but everyone is saying that basically it will all depend on the situation with the energy sector. The inflation wasn't as strong as it has been expected, 26.6% instead of the 30% that has been expected, but it's once again concerning that the inflation pressure is the highest during the winter season. So we know when it's going to get a little bit warmer, then we will have less deficiency of electricity, and the overall inflation pressure will be lower. Speaking about the currency markets and the currency rate, we know that during the devaluation periods in Ukraine, we have that the change of the balances between different contexts, and this year that did not happen because we have the differences between the logistics and the demand. So the export was not working as it might have worked under other conditions, but we were lucky that this deficiency that were covered by the big amounts of the money of the foreign support that has been higher than the $30 billion. Speaking about whether the confidence and the optimism of the businesses, what level that is, you can see that there was the survey by the National Bank and the business associations, and we have seen that we had quite a growth of confidence during the summer, but then after the big shellings of the energy infrastructures, and we see the decrease, and you can see what has happened in the last months, especially during January 2023. And because the date of the presentation has slightly shifted, so we covered both December and January, so we have thought that, some of the sectors during the December, they have started feeling themselves slightly better because there has been some growth in the service sector. But so we have seen that there has been a tremendous decline in January. Even the expectations all have fallen. As you know, our center also participates in calculating the losses of Ukraine during the wartime, and we had the evaluations of the direct losses, and the physical damage to the infrastructure has increased up to $2 billion. And as you can see, there are some of the lines in the table, they're showing the zero dynamics, and that doesn't mean that there has been no damages in these sectors. It means that the calculations over this specific lines are being in process. So unfortunately, this figure is going to increase. And I'm just going to also show some of the sectoral trends as well. The metallurgy, that has been one of the main flagship sector of Ukrainian economy, has experienced a downfall up to 3/4 because there's no opportunity to export the products, and due to the damage to the main assets, there is a slightly easier situation that there has been some rent payments, and that has been completed, and starting from November, hand is the increase of the world prices for the iron ore. That's something that has improved the dynamics for the exports as well. But we do understand that without the access to Ukrainian seaports, we have limited opportunities. There are some of the conversations of including these products to the grain agreement as well, and we can see that that's a very important moment. And we know that we actually wanted to have the wheat agreement for the longer period, and it would be widened for the broader ports as well, but it didn't happen. So there is a very small hope that it will happen to the other types of products as well. Speaking on the energy sectors, fortunately, there are some powerful rockets. There's a lower number of powerful rockets in Russia. We know that there is the lower number of that, but unfortunately the problems with Ukrainian sector has increased due to the highest demand during the winter season. And right now we understand there is a typically warm winter, that's very good for us. So if I average, the electricity coefficient was 80 at level of 80%. So right now the Ukrenergo data says that it's right now to the level of 20%. Moreover, except for the maintenance operations, with their support, the Western partners are helping us with the equipment, with the money. And moreover, the businesses have established the imports of the generators and accumulators and other equipment. Plus, there is a facilitated process of import of the electricity, and that is slightly cheaper than to produce it with your own generator. It's easier to import that. There was a grain initiative that has been provided by the end of July, and it has been prolonged and is still in action right now. And even though the logistics part, even though the companies have established the logistics with other ways, but we know that this green agreement has actually improved the situation significantly. Speaking about the banking sector, speaking about the operational work, it has been stabilized, and I think that we're going to see that depository accounts that is getting better. Unfortunately, the other operations are not that active. Moreover, in the last report on the financial stability of the central bank, the regulator has decreased their forecast of the credit risks up to 30%. I think it's around 25% right now. So maybe those risks will not come true fully. Well, thank you for your attention. That's my part of the presentation. I would like to pass the floor to our speakers. Yes, thank you very much. I think the next part is going to be the budget sector, and Yuri Haidai, the senior economist, and he's going to discuss what has happened to the budget year. So, Yura, what did we had with the closing of the budget year, and what we have seen throughout the first months of the new year already? So I hope you can hear me. Yes, we can hear you well. Good. So I think we will start with just reminding you that in year 2022, the income to the budget, we didn't have sufficiently income to the budget in order to cover all of the expenses, and the deficiency of the budget has been financed, first of all, with the help of the external assistance that has been provided to Ukraine, and with the monetary missions, and with the military bonds. If we will take a look at the level of this fiscal income for the 2022, then we will see that some of the sources, they have shown the results, and they correspond to the real state of economy. So you can see that there's the main resources of income for the state budget was the VAT. And we can see that here we had some negative impact due to the discounts, and the new opportunities for the imports, but it has been compensated by the very harsh administration of the VAT. Speaking about the downfall of the customs incomes, there are some reasons of that as well. First of all, there was the postponement of the productions of the fuel in Ukraine, then the closing of the the production of the tobacco goods in Ukraine, so providing the limits on the selling of the alcohol, and of course the decrease of the usage and the production of electricity due to the migration from the country, and also due to the massive shellings from the side of the Russian Federation. If we will speak about the fiscal revenue and the tax revenue to the local and regional budgets, then we're speaking about the income from the private taxes. So once again, that you can see that if we will combine it with inflation, then you can see there's 101% up till 2021. So most of that was the incomes from the personal income tax from the military, and there was an increase from the growth of the unified tax that has been explained that certain businesses have now turned to the simplified systems of the taxation, and we should see that there's going to be the backwards process in the summer of this year, and there's also the decline of the excess taxes, and we're talking about the different discounts that have been provided for the fiscal year this year. If we will consider how the overall resources for the consolidated budget look like, then you can see that the grant in financial support has already overcome the personal income tax, and basically the grants have been the biggest income for the budgets, and the personal income tax has become the second. And I here would like to draw your attention to the idea that for the local budget, 83 billion, that has been basically, that's the transfer for the state budget due to the personal income tax based on the payments for the military men. If we will also consider the expenses of the consolidated budgets, then you will see that more than a half that has been the defense, and also there was the coverage of our debts. In year 2022, Ukraine has received $31 billion of the foreign investment and foreign financial aid. This financial support has been provided in a different shares for different months, and it has had some negative consequences, and it has been communicated to our external partners as well. So both the US and the US and the EU have provided voiced out their main priorities is to have the equal shared financial support to Ukrainian budget, and we already have the first signs of it in January, that we have already received $4.2 billion, and that's quite enough to cover the deficiency of budget, and we already have the first month since the war has started. Well, we didn't have the problem, or we didn't have to go to the monetary support of the budget. Because if we will consider last year, then the external financial aid covered 60% of our additional needs for the state. And during the springtime and during the summertime, when we had the increase of the monetary financial support, but by the end of the year, the Ministry of the Finance were able to go to this 400 billion hryvnias limitations, the one that we have voiced out when the war has just break out. And so basically that had a very positive impact for the macro stability of Ukraine. And we do hope that in year 2023, the monetary support and the monetary financial support is going to be limited significantly. And if we will analyze January overall, then Ukraine has already received 3 billion euro from the European Union, 1 billion from the US, and we have received also the grants from Estonia already. That's important to outline that the European Union 3 billion is basically the part of the new package of the 18 billion euro package that has been planned for year 2023, but it also in the same time a leftover of the previous package that was for the 9 billion, the one that hasn't been provided to Ukraine in year 2022. They only had received 6 billion by that time, and so there are certain expectations that the next tranches are going to be, the next transactions are going to be completed depending on how the reforms are going to be progressing, depending on this program. that has been discussed. And according to the evaluation of the World Bank, Ukraine will require from up to 57 billions of external support this year. That is slightly more, and the lowest bar, which is 39 billion, so the lowest bar, the lowest threshold is lower than the expectations of government, but that's basically evaluation that has been conducted even before. That has been a stronger impact on Ukrainian economy by the Russian shelling of the electricity infrastructure. So maybe right now this need is going to be just the same as corresponding from what is stated in the figures. Thank you very much, Yuri. I wanted to also invite Maria Tomilina, our new colleague, to join us in the monetary policy. So we've had the session for the National Bank's board, and they've had the big session on that. So Maria, please, the floor is yours. Good evening. I hope that you can hear me well, and I hope that you can see the presentation as well. Let's speak about the monetary policy. So let's first of all discuss the overall rates. So the rates are going to be just the same on the level, the key rate on the level 25%, and the same is going to be the yields of the bonds, and it's going to be the 18.5%. Their rates on the deposits is going to increase. They were on the level 12.9% and 11.5% for 12 and 3 months respondingly. By the end of year 2022, the inflation was on the level 26.6%, which is lower for 3.4 percentile points than we had expected before. The stabilization of this task was due to the broadening the position of the proposition of the products, the change of the utility rates, and the fixated rate of hryvnia, and establishing the new logistic chains. Even though that the National Bank keeps the key rate for the highest level and has been implementing the certain of events on improving the monetary transmission, we believe that we're going to be able to evaluate how it influences the overall inflation and to discuss what would be the efficiency of the key rate that has been established. Speaking about the currency rate situations, up to the US dollars, it's still fixed, and it still hasn't been, it only been corrected in July. The rate, the rate is also sustainable. It has just changed by 1% compared to December, but from the National Bank's point of view, there is a need to sell amounts of the foreign currency to support the current rate. But right now it is possible to finance the current expenses with the help of the money received from the international partners. Even though there has been significant expenses during 2023-2022, we only has a decrease of international reserves by the level of 7.9%, and now we have $29.5 billion of US, and it helps us to finance the imports of the 3 months, which is lower than the minimum needed index. Last month, the National Bank has kept the level of the key rate on the level 25%, and they have argumented that there is need to get inflation sustainable and to support the rate and macro-financial stability during the highest level of uncertainty. Plus, National Bank has increased the demands for the bank's reserves. There's going to be changes in 2 stages, in February and in March, and those changes are going to come gradually, and that will be specific conditions for the current accounts. These events are going to help to improve the liquidity of the banking system, and it's going to help to increase the attractiveness of the hryvnia's deposits and hryvnia's assets. So we will improve the sustainability of the currency rates, and National Bank will be able to then switch to mitigate and facilitate the economical limitations for the economy factors. Plus, starting from the 18th of February, there will be the increased numbers of the bonds, which will help the bank to cover up to 50% to the overall reserves. That will help also to stimulate the internal domestic bond market and will help us to avoid the additional monetary reactions for the national budget this year. Speaking about the forecasts, the downfall of the real GDP for 2022 was 30%, which is lower than expected market, and the National Bank forecasts the growth of the economy in year 2023, and we expect to see 0.3% due to the outcomes of the energy era and due to the preservation of the security risks. But up till 24-25, if there's going to be an improvement of the security situations, if there's going to be the growth of yields, and if we're speaking about the improvements of the production facilities and establishing the domestic demand, we will be able to return to sustainable economical growth. It is expected for the inflation to be on the level of the 18.5%, and due to the really harsh norms and the decreased demand. For the next years, the inflation is going to be slower due to the decrease of the safety and security risks up to, again, reconstruction of the supply chains as well. According to the forecast of the National Bank, in the next years, we're going to experience the deficiency of our main payment balances due to the limited opportunities of exports, a higher expenses for the displaced persons abroad, and due to the high demand for the additional imports to recover the country. Speaking about the international partners, we hope that we will have enough support from our international partners and due to the support of the World Bank and IMF, even during the times of the prolonged war. Thank you very much, and I pass the floor to my colleagues. Yes, thank you very much, Maria. So basically, right now we're going to switch to the discussion mode, and we're going to have the representatives of different positions. We'll have three very interesting participants. We're going to have Denis Kudin, the first deputy of the Minister of Economy of Ukraine. So thank you very much, Denis, for joining us. That's not the first time you've done it. Thank you very much for joining us all the time. We're also going to have Serhii Nikolaychuk, the deputy chairman of the National Bank of Ukraine, who's responsible for the monetary policy. He has been with us for many times already before as well, and even over the first events he has participated. And we also have our colleagues, a researcher from the JP Morgan. We're pleased to welcome Nicolaie Alexandru-Chidesciuc. What is the right way to pronounce your name?
Thank you.
Thank you, so Nicolaie Alexandru-Chidesciuc. So thank you very much for your support, and thank you very much for joining us as well, who is the head of the EMEA Economics at JP Morgan. In the investment bank in JP Morgan, and he has been working for quite a long period of time in investigating and researching the economy of Ukraine as well. So why did we have this idea to discuss this connection between the monetary policy and the economic growth? Why have we thought about that? There was two more important points about that. First of all, that in the International Economic Forum that has taken place in Davos, and you know that has been an important moment for all of us. It has been published, the new forecast for the IMF has been published, and this is an official point of view that the main inflation peak has already passed, and there is the opportunity to expect that there's going to be a slightly lighter scenario for the development of the world economy, even though that for 3 or 4 months ago we have been talking about the even higher rates of inflation. So I think that it's a good news from the world market. It's a good news from the world economy and a good news from the world market. So that is why we wanted to have Nicolaie with us, so that we would have this perspective as well. So how does the overall trends all over the world are seen in the markets, in the developed markets and the developing market. And also there has been the new forecast from the National Bank that has been presented recently. There has been also the positive assumptions and positive expectations for the inflations for the year 2023. And we didn't see the change for the key rates. And we know that the key rate is going to be quite positive once again. And we hope that it's going to be definitely like this in the year 2023. So thus, under these conditions, when everyone is trying to find the way to stimulate Ukrainian economy under the harsh conditions of war, everyone is facing the different solutions that have to be made of how you can stimulate the economy, and trying to look up to the National Bank to figure out whether everything has been done in place so that the money would be available for the businesses. So I think I will start with Serhii, because he is the person who is actually producing the policy. So Serhii, what would be your answer to this main question? Outside from what has been already said in the official releases and outside of what has been said by Maria and by all of our participants before, what would be your point of view? Because I think that you've also voiced out to preserve the key rates on the same level. Well, I don't know, but maybe we will see the protocol that is going to be published soon. Why have you come up to this decision when we're going to be changing the other conditions and where we're changing the conditions as well? I just wanted to note that Serhii is going to be with us only up till 7 o'clock. So after Serhii, we're going to switch to Denis, and Denis, maybe Serhii and Denis will have a part of the discussion, and then we'll go into get to a closer conversation with Nicolaie, and then we're going to have additional participants joining us. So we're going to have then Volodymyr with us. So yes, please. Serhii, yes, thank you very much, Hlib. And first of all, thank you very much for the invitation to the discussion. Thank you very much as well. And thank you, Maria, for actually conducting my work instead of me, because like she done it ideally. She has summed up all of our forecasts and all of our decisions by the National Bank. I don't know if I were able to do that in such a structured way, actually. So, so right now for me, that's only what is only left is to actually answer the questions that the Hlib has pointed out, and to add up some more details to some of the decisions that have been made. So first of all, I really would like to start with a little bit of reflection to what is happening right now in the world economy and what has been outlined. Now, so Hlib, you have said that the inflation is now decreasing slightly faster than most of the world banks have expected. And right now there is a very active discussion of if the central banks should continue, the central banks of the main countries should continue increasing their key rates as it has been declared by them, as it has been declared in the year before. And that's an interesting point as well, because, it's an interesting thing here is that right now the markets, they expect the central banks not to be that aggressive, and they're not going to be following the forecast that they've had before and they showed before. But in the same time, they're continuing, the central banks are continuing with the rhetorics that they had before on how they're going to deal with the inflation. Yes, the inflation trend has decreased, it's now going down, but the central banks are keeping that in mind. So in order to preserve these trends, they will have to continue with the harsh monetary policy, and they will have to keep the key rates on the really high level, the highest up till the last decades. So they will have to keep it up with that for a quite longer period of times. And financial markets that do not expect that. There are some comparisons that can be done with what we are doing and what we are looking up to. We know that the inflation trend has not changed for us right now. For the last 3 months of inflation for us has been on the very same level as it has been, so it was lower than we've expected. And for the next year, we have even thinking that there's going to be a faster decrease than we have forecasted. But right you are, and the update of the inflation forecast, it has been for us is an important moment for us to change the pattern for the current rates. First of all, we're talking about that right now we're not working under the classical inflation targeting. So, our policy is about the rate stability. And in order to have the currency rate, we need the number of tools to be working with. First of all, we need to have a very clear monetary conditions and harsh monetary conditions. And in this case, the rate is just a part of this role. The second part for our tools is now dedicated to fight the overall proficiency of liquidity and thus to stimulate the banks to increase their key rates. And we're also working with the Ministry of Finance so that we would be able to increase the income rates on our internal bonds and military bonds, and we can see that progress for the last 2 months. That's all causes to providing a more attractive tools for the population in hryvnia, and thus then some part of their liquidity they can actually target to the deposits in hryvnias and providing choosing that during the hryvnia tools instead of the foreign currency tools, and thus also decreasing their pressure for the currency market. The second tool that we're working with is the currency intervention, and we do understand that we're really limited to this amount of the international help and assistance that we have received, and we know that for the couple of last months we've had this opportunity to have a better income of the currency and better income of the international support compared to what we have saved to the markets. We've had the reserves of the $22 US dollars before, so right now, as we have already outlined at the monetary press briefing, our reserves as of the end of January was on the level of 30 billion US dollars, and we feel more comfortable now with the reserves as well. And the third factor is the currency limitations. That is something that we also use as the tool to regulate the market. But we also understand that each of those factors, the currency interventions, the harsh monetary conditions, and the currency limitations, all of those tools are the limitation tools. Those are the limitation tools also for the economic activity. So if, for example, we have some preconditions, then will be some of the tools that we will stop using. So right now we see the need in our paradigm. We now see that we need to take down some of the limitations that are the most destructive, that are not constructive for the market, that are actually taking us back from the normal economical activities. But even as was in the period for 2014-2015, the same mitigations of the different tools are going to be very controlled so that we would not lose the situation, the control of the situation, so that we will be able to provide the currency stability, and so that we will be able to also to control the inflation rates as well. And in this aspect, I really loved the graph that Dmytro has shown, the graph about the GDP level, the GDP that has decreased the fastest during the last year. We've had a 30% GDP decrease, and it's quite clear that due to the full-scale war. But if we will get back to this graph, and if you will take a look at the left side of it, so the downfall of the GDP in the beginning of the 90s, if you will take a look at the accumulated figure for the first 5 or 6 years of the GDP downfall, then if you will just accumulate this downfall, then you will see that there was a deeper downfall than the downfall that we have experienced last year. Speaking about the 90s, you can see that then in 1996, 1997, the downfall of the GDP was basically, the GDP was half of the GDP of 1991, 1992. And one of the reasons, from my point of view, the reasons for this downfall and the fall of the economy of that year was the monetary policy. The monetary policy, then the coupons that we've had as the main money, the providing the cheap money mass to the economy and the desire to stimulate economy through the monetary emission. And we all do remember what were the consequences of this kind of actions. So what we have right now, we can discuss of what's going to be the economical growth for this year, whether we will experience the economical growth at all, or whether the GDP is going to decrease. But we know it clearly that even if we're going to go with some kind of a negative scenario, then the main reason for that would be the Russian rockets and Russian missiles, but not some kind of a fraudulent decisions from the Ukrainian economical power. And in this case, we do believe that in order to help the population, the businesses to adapt, for the businesses and population not to experience any additional economical shocks up to all of the shocks that they're currently experiencing, we understand that the actions of the Ukrainian authority have to be targeted on supporting the macroeconomic stability. The consequences of the monetary stimulations can be really, really painful. Can be really, really painful for the whole system and for the whole economy. That would be briefly my reflection to the questions that you posed and to the response to those presentations that I've seen as well. Yes, thank you, Serhii. I have a very brief question and I will pass the floor to our next speakers after that. You were really clear about mentioning that your goal is to decrease the currency limitation as one of the moments that negatively impacts the work of the businesses. So, when you're talking about that, you're speaking about the limitations about the current operations, or you're speaking about facilitating the limitations on the overall flow of the capital and the cash flow? Well, right now we're working on the roadmap, and we're talking about discussing all of the limitations and how they impact the economy and how they impact everything. We're trying to think of what kind of limitations we can take that might cause additional losses of the currency in the future time. Okay, thank you very much. Please use the Q&A function. There is the link for our presentation and you can now pose your questions there. And I will pass the floor to Denis. So Denis, what would be your point of view? What do you think, whether this policy that is currently being held by your colleagues and partner from the National Bank, whether it is optimal when we're talking about reaching the goals of the sustainable restoration of the economy under those harsh conditions? Yes, thank you very much, Hlib. Thank you very much. And thank you, Serhii. We have been discussing that with Serhii for quite a long period of time. And there's one thing that we have to know clearly. The main task for the Ministry of Economy of Ukraine is the growth of the GDP. The main task for the National Bank is to support the macro-financial stability. And it's quite clear that the question of the key rate is the important moment for both of our institutions. The logic of the National Bank is clear, and moreover, I do believe that this example of quite good, quite stable actions that the national banks have provided throughout the first months of war is going to be a textbook case about what the policy of the central bank should be under the conditions of the very deep crisis that the war is. Of course, if that wasn't for the steps that the National Bank has conducted at the very beginning of the invasion, we would have a completely different situation with the GDP than you have shown us today. But, we're not talking about the year 2022, we're talking about the year 2023 now. And here we have to understand what is it that we're setting out for ourselves as a state as of a main task. It's quite clear for the National Bank of Ukraine was thinking about the macro stability issues, that macro stability that most of all is made from the macro stability targeting. But I really like how Serhii had said that it's not a classical inflation crediting, as we know that, as we have got used to that before the war. And we're talking about the non-emission character of the support for the economy. And I am fully on the same page with us. I absolutely agree to the point of view that in case if we will have to use the services of the National Bank for the direct budgeting through the emission, that in both long-term and in short-term perspective, we will not get to the very good conclusions with that. On the other hand, we're very optimistic about the international support and international aid that can be provided to Ukraine. If in 2022, and you have noted down that in your presentation as well, if we've had a very clear flow that has supported Ukraine, it wasn't a regular money flow because it was a surprise for everyone, then year 2023 is more forecastable. So we would like to have a sustainable and forecastable and predictable money flow. So for us as Ministry of Economy, we are offering to identify the key goals of the state as the support of the defense potential so that we can win this war. And talking about that, we have to go basically against the Constitution. It's quite clear that the Constitution writes down the main goals of the National Bank, but the Constitution does not presuppose the situation of war. And, you know, they never have considered this kind of a force majeure in the Constitution. So we do believe that right now the main goal for the National Bank is to provide the support for the victory against the enemy, to provide the support to the defense potential, and thus to provide the financial support to economy. We see how the drying out of the money from the economy has a bad impact for the quick restoration of economy, because you know we are quite the same with the National Bank on evaluating the 2023. So we give 3.2% of growth. National Bank gives 3% of growth, but you have to consider the banks. Let us compare it with year 2021. Both the National Bank and Ministry of Economy, we are forecasting that we've never had the 30% of economy, that we're not going to have it this year as well. So we know that we have had this downfall, and the faster we will be able to get to the pre-war level of GDP, that will be the basis that we're going to have it as a foundation for the further on development. We had $200 billion of GDP in year 2021, so the final year before the war. Right now, we have now what 154, 156? And that is not kind of a dramatic result that it might have been. So basically, that's actually the level of year 2020, the COVID year. So the war has just got us 1 year back in our GDP. That's not that bad. Speaking about the monetary policy, I think that we need to outline the 4 components that we have to analyze all together just to find our stand on and where we would like to go to. The first component is providing the sufficient offer of the sufficient money offer for the economy. The National Bank has completed this task. We have the grants. We had some emission financial support, but still we were able to provide the needed amounts of money for the economy in year 2022. And the fact that we're not planning to continue the emission monetary emission and the emission financial support, it's a very good sign. That is already a very good impact for the macroeconomic stability, isn't it? The second component is also controlling the worth of the national currency and our currency rates. And here, we also fully support the current policy of the National Bank of Ukraine. We do believe that the most important thing that we were able to provide was the predictability for the businesses of what is going to happen. Like, you know, everyone were able to provide their forecasts in the couple of scenarios for year 2023 when I'm talking about the businesses. That's very important. Our main macroeconomist, Nikolaychuk, she's always saying that, you know, the plan and the forecasts, they're worth nothing in the times of war, but the forecasting is important because you are building the different scenarios that you can move on for as businesses and as the country overall. And it's clear that the National Bank requires tools, the tools that Serhii has mentioned as well, so that we were able to keep those rates on the same level as it is. So now talking of whether we're going to be some currency limitations, yes, of course, there will be some currency limitations right now, because of that, it will not be able to balance on the expected reserves. The 27 billions is there should be by the end of the year. Unfortunately, they will not be able to work without the limitations because we are dependent on our exporting opportunities with that. The grain initiative has actually saved the agricultural market. It was not brought into the iron market, and the figures that you've shown that have been also quite loud. You know, the metallurgy cannot live without the electricity, without the energy, so there's nothing you can do about that. So you need electricity and you need logistics, and you cannot have it otherwise. And you know that metallurgy is #1 in our exporting structure, so unfortunately without those we will not be able to move on with that. The third component is the overall stability of the banking system and providing the opportunity and having the liquidity to buy. So basically what has happened, that our main capital has been preserved through the war. That's a harsh decision that has been made by the National Bank and has been criticized strongly, but we should not only think about surviving today, but we should think about living tomorrow as well. And it would have been a big mistake of not doing any steps to support the banking sector for the future. Because how can you live then next on after the banking sector? How can you finance the restoration of Ukraine without the banking sectors? But there's always buts. There's always buts. So we're coming to the fourth component. The fourth component is to providing the optimal cost for the money in economy. And here we have some questions left as well. We were quite moderate towards the decisions of the National Bank of Ukraine to take a look at the overall rates. Yes, Denis, can I just interrupt you because I will have to run straight away, unfortunately, and I would like to have a comment about this question straight away because I just wanted to ask you whether you believe what were your evaluations from the losses of the GDP if we will increase the rate up to 25%. And can you recall whether these evaluations have changed right now after the GDP has downfall up to 30%? Yes, this is one thing that I wanted to comment upon because I have taken the very same notes that we have done in June, if you will recall that as well. So we have discussed that afterwards. So, you know, National Bank is absolutely independent institution in our country. So first of all, there was the increase of the rate, and then we had an internal discussion about that. And we have discussed it then. And there was some more important moments that I wanted to outline here. And we've discussed then that the rate of the 25% will not resolve the question of losing the capital due to the card payments of our migrants. And we know that it hasn't resolved this question. So it has still a problem that is relevant for all of us. The second moment, we believed then, and we continue to believe now, that the inflation is fully dependent on the offers due to the damages to the infrastructure, the logistics, and that's all about that. This is the key problem for the inflation because the family that sits in the car in Zaporizhia and tries to go away from the shell and they don't care how much the fuel costs. There should be fuel there. If there's no fuel in the gas station, that no matter how much it will cost, this family is going to be ready to pay for these fuels, and they will give everything because they're trying to save their lives because of the war. And so, you know, they're not going to take this money to the bank for the deposits. So you can only answer this challenge by broadening the offer of the goods, of the foods products, of the critically important products that are needed for the households under the conditions of war. So our offer, even though it's counterintuitive, offer is to increase the offers increase the offer. But this is against what the government is doing, what the National Bank is doing. The government is doing it through the loan program 579. There's also the moment of how the transmission mechanism is working here, and he said, like Serhii, it doesn't work, and like Serhii says, yes, because you're doing everything that we do not want to do. Yes, but this is the moment of how we have this collaboration between the National Bank. We can see the different goals for all of us, and sometimes we are diminishing one another. Yes, I just would like to give a couple of words to Serhii, because I know that he has a meeting to our international partners, so we will just give him the moment to answer that, and we will continue our discussion on this topic. Yes, I'm really sorry that I have this problem with the schedule, because I really like this topic and I really like this discussion, and I do believe that we can discuss it for the longest period of time of how our key rate of 25% is influencing the transfers of money of our citizens, of the stimulation of the offer provided to the markets. But for sure, I can say that, we are on the same side with Denis from 579 program for improving the offer for those products that we believe are critically important for the economy, and are critically important for the customer and consumption inflation as well. But Denis, I would really like to know what is the precise evaluation of how the increase of the rate influenced the GDP. Because, well, I can read it out, what was the evaluations in June after we have increased the currency rate, after we increased the rate from 10 to 25, that might give 5-7% of downfall up to the expected downfall of the GDP on the level of 35%. That was the evaluation of the Ministry of Economy in June. Because, like, you have seen in your basic scenario, you had 35%, we had 33% of the downfall of the GDP in our baseline scenario, but we see that the reality has turned out to be slightly better than both of us assumed. But your evaluation then, additionally, for the GDP losses for the GDP due to our decisions was up to 5+7%. But how do you see that after having the main result? I just wanted to remind you that the main assumption was that we will stay with the closing the logistics routes. We never had the grain initiative done in June, and I do believe that it is one of the key factors, the grain initiative, that is one of the key factors that actually changed our forecasts as well. And it actually impacts the year 2023 as well, because we have the first campaign right now, the spring's campaign right now. If we didn't have the grain initiative, we wouldn't have the amount of the areas covered with agriculture. Yes, like for this year, we're forecasting. There's a difference in forecasting with the National Bank of Ukraine. There is a differences of up to 5.5 billion tons of assumed yield of assumed harvest that we're forecasting. We do see that there's going to be a biggest number of harvests this year. So, Serhii, I would comment it on this. First of all, what we believe that the increase of the key rate has also increased the expenses of the enterprises. We didn't expect to see the amount of the loan takers whose contracts would be connected to the key rates of the National Bank of Ukraine. That was a surprise for me. And I know why. Because, the key rate has decreased, and the people from the enterprises, they've saw that it is going to be the beneficial for them, and they have stated in the contract the key rate, especially for the agricultural sector. For them, that was like the key rate plus one or half a point. But right now, it seems that the level of their expenses, and you know these figures very well, but I can remind you of that. If, for example, we had the level of rate was 9.1 in year 2021 of the point of interest, then in November 2022, that was 20.8. The average interest in the agricultural loans. But for the households, it didn't change. It was like 33% for the loans, and it's just the same. So this additional costs for the enterprises that has negatively impact inflations, because the producers will post these losses for the customers. the losses of the economy, we have now put it to the shoulders of the state budget, because the main money, what we have in the budget, is on the program 579. And 579 program, I would like to remind you, that presupposes the partly compensation of the key rates through this directly from the state budget. Well, basically, the state directly does it from a different tool, no matter what the tool is called. So thus, what we have, that the amount of the new deposits does not grow. If we're talking about the year 2021, then we've had at level 2.29, or like, okay, 3%, what was that was in 11 months. Okay, even if like that. So I think we should compare the first half a year of year 2021. Before the rates have been increased, and if before the rates we've had 1.7, then we had 1.6 after the increase. So there was no huge increase of deposits after that. The huge increase of the interest rates due to that in the deposits as well didn't happen. I know that the National Bank, there are now changing the rights for the reserves, and there's going to be the change in the order, and there's going to be the additional policies to stimulate additional deposits from the physical and legal entities. That's clear, because otherwise we don't have the logics for this high key rate. So in this case, I think I'm going to say maybe a bad thing, but basically we all do understand that the inflation is actually the payment that we pay for the war. This is something quite clear. And when we are comparing ourselves with our neighbors, like for example, our inflation is 26.6 and Hungary goes 23 and Latvia 20 and Estonia has the inflation on the level of 20% as well. Lithuania has 20%. Czech Republic has 17% of inflation. They don't have war, but they have inflation. So it means that overall, the overall international dynamics has impacted the macro region. It's quite clear that in Ukraine we also have the war that impacted our economical activity as well. So what impacts the inflation except for the imports? The food products, the emergency products, and the level of migration. Because what we had a big decrease of the demand due to the people that left. So overall, what can we do about that? And our answer would be that we should continue increasing the financial support for the offer. It shouldn't be done overnight, but the increase of the offer will help us to decrease the inflation gradually and is going to stimulate the economical growth. In the same time, we have to understand what percent of inflation will be the pro-growth inflation. What would be acceptable for us as a society, and what percent will not limit our growth? So this is the balance that the government and the National Bank should find. And we are in that discussion all the time. Thank you, Denis. I know that Serhii, he now has to switch to a different meeting, but I have a question, and before I will pass the floor to Nicolaie, and I think that it was very interesting for him to listen about our discussion as well. It was an interesting insight of how the monetary policy is being discussed in a country in a war, and that would be interesting, that the country that has a developed tradition of the economical discussion. So we have discussed this question with our colleagues today, because we don't have this kind of a harsh discussion that you might have between the institution, but we're also discussing that as well, and we've tried to forecast and analyze that. So on one hand, there's something that you're saying, Denis, and the need for the support of the offer, but on the other hand, we have a very strong fiscal stimulus available as well. So starting from March 2022, there is the support for the militaries, and this is something that has increased our expenses for the budget, and our international partners, they're giving us a lot of money for the private consumption. And the question is here, in what way that money are they spent in the economy, whether they're getting concentrated in the banking system, or whether there's equally approach and equal access to this money for all of these sectors of economy, because we do understand that the internal need for the households has been stimulated better, but we can see that with the inflation levels overall, that even though in the world there one dominating process, but for example, we have seen the increase of the food prices in December as well. So what do you think of that? I will try to ask you very brief, and also thinking about what are the trends in different sectors of economy, understanding the overall conditions when some of the sectors have this money from the fiscal stimulus, some of the sectors are not able to receive that, for example, the agricultural sectors that are working for the export market. So what do you think about this balance, Denis? It's a harsh question. Basically, okay, let us talk about the agriculture. What we have seen, that's a very interesting dynamics, because the agricultural producers, they're changing the standard structure of their yields. So what's happening right now? They understand they will not be able to provide the very same amount of yields, but they now switching to the crops that they will give less in weight, but more in money. That's a logical change of the concept. But basically, because we basically do not know how much time will the sea blockade last. Like, we have faith in Ukrainian forces, and we're hoping for the good ideas for all of our military leaders, and we hope that the blockade is going to happen sooner than later. But our forecast is being built that we assume that the status quo as of now will be preserved for the year to come. As soon as the sea will be fully available for us, for sure, we're going to have a very quick change, and it will happen in agriculture, in metallurgy. We basically will be able to take down the pressure from the railroads and from the automobile roads as well. There are the two important moments. The overall, there's $270 to carry it by the railways per ton. So this is basically just the same as the cost of 1 ton in mining, 350, 380 and dollars for 1 ton in the sea. And this is basically just as 1 ton in agriculture. But the average cost for the automobile transport is $1,500, 100, 500, 1,500, 100, 700. We are only using cars and freight transportations for the high VAT products. And when we're using the automotive logistics with the mining products or agricultural products, of course, we are decreasing our opportunities on exporting the high VAT products and increasing the prices for our lower VAT products. But I can see that there's going to be some interest in the projects of actually cleaning out the logistics bottlenecks. And we have seen some projects in Ukrzaliznytsia railway, and our government has been working with the governments of the European countries to break this new windows for the European countries. That's a key question, and all of our negotiation sessions with Europeans. It takes a lot of time. There's many different technical issues that have to be done and have to be covered, and we can only go as fast as our European colleagues work with us on that. So we have to understand that we're moving together in this point. We cannot run faster than they do, because if we've opened something and launched something but they didn't, there's no results on that. I do hope that we're going to have some good sea drones, and I do hope that we will be able to deblock our sea access with that. So yes, we do remember this impact that the exports has in the GDP. We have to understand that if we will consider year 2021, we had 68 billion and up to 200 in the GDP. It was 34%. And in 2022, we've had decreased it to the 30%. We've exported the goods up to $44 billion. We've lost $24 billion of money due to this export. Yes, there is a question of additional the product in lack, and we know that the pricing dynamics went down, but for sure we would have received this money on the exports. But it actually causes the pressure for the currency, and the National Bank has to deal with that. And then they have to find the tools of how to deal with that and how to balance it, how to get the equilibrium of that. Yes, thank you, Denis. There is one very good question for you in our Q&A section on the access for the 579 program. But before we get to that, I will pass the floor to Nicolaie. So,
discussion between Ukrainian policymakers, and I hope that you could act as a sort of judge in this case, having a global and regional perspective. Like, certainly the country in war is something special, but like from your viewpoint and from global trends and regional trends that you see, like, what should be the best policy for Ukraine?
Hello, everyone, and thank you for inviting me, Hlib. This is no easy answer, right? I mean, I cannot give an easy answer, and I understood some of the debate between Serhii and Denis. I cannot say that I understood everything, but I understood some of the debate. And look, on the inflation side, I think it's clear, and Denis kind of highlighted some inflation numbers in countries around Ukraine, right? I mean, it's a global phenomenon. What we've seen on the inflation front last year, it was worldwide. It was happening already before Russia invaded Ukraine, but after the invasion, it got accentuated, mainly driven by the increase in energy prices and other commodities, right? And that's quite what drove a synchronized increase in inflation. And then what we've seen globally, also a synchronized increase in interest rates from central banks, which were trying to kind of catch up with the inflation and trying to stabilize inflation. Now, what's relevant maybe for Ukraine? I mean, Ukraine is what we call a frontier economy, right? And we are looking in JP Morgan separately at these economies that we call them edge economies or frontier economies, some of them. Why is different from them, right? Because these economies are being hit by additional shocks that come on the funding side. They need to borrow from external markets. And they also suffer from various, let's say, wrong policies domestically, some of them, not all of them. And that means that there are threats to macro-financial stability. In the case of Ukraine, clearly the war generated this sort of threats, right? Threats to macro-financial stability. And those threats were serious. I would say that, broadly speaking, policymakers did a good job. As Denis highlighted, right? I mean, despite these massive challenges, inflation was kept largely under control. Exchange rate, the nominal exchange rate, the fixed exchange rate was used as an anchor, so that clearly helped. Policy rate was increased, but to be fair, and this was part of the discussion as far as I understood, right? The transmission mechanism in Ukraine doesn't really work as it should, right? So there needs to be more work done there in order to improve the transmission mechanism, and I know the central bank is taking steps in that direction in their latest decisions. But again, broadly speaking, I think policymakers in Ukraine did a good job. Help came from abroad, that's clear as well, right? Because central bank did fund part of the budget deficit, right? But there was significant funding from external sources as well, right? So this is what makes Ukraine maybe a bit different from an economic point of view relative to other countries, right? So while other frontier economies faced this tightening in external financing conditions and lack of access to markets, right? Ukraine clearly was significantly more impacted in a negative manner because of the war, but had access to funding from donors, right? And that was good in supporting policymakers, and that was good in preventing, let's say, even more severe deterioration of the Ukrainian economy despite the war. And I think that's probably one factor and one reason why initial downbeat forecasts for Ukrainian growth were not realized, right? I mean, in the end, Ukrainian economy performed somewhat better than what was initially feared. I mean, I would not recommend policies going forward. It's really not my place to do it. But let me start with a bit of the global context, and then maybe try to, similar the way I've tried to kind of place Ukraine in the global and regional context, to try to do the same for year 2023, right? So where we are now, we are in a clear phase of disinflation. The main driver of this global disinflation is in the goods sector. So goods were a big source of inflation in 2022. Now, a large chunk of that is being reversed. Energy prices are also falling down, right? So that's another big factor behind the disinflation. The part which is not really disinflating, it's on the services side. I mean, this varies. In some countries it is disinflation in services as well. In other places it's not. In Ukraine it's kind of mixed. I mean, services inflation is also relatively strong still, I would say, in Ukraine. But broadly speaking, there is disinflation globally. And when I talk about disinflation, I mean in momentum, right? Let's say 3 months over 3 months, or monthly, seasonally adjusted data, rather than comparing the same month, let's say December 2021 with December 22 with December 21, right? So that part might still move higher until March, until the peak. Central banks are also either already stopped hiking or are getting close to stopping to hike, right? I mean, we've seen Fed yesterday reducing further the pace. In EM, many countries have done it already. In frontier space, like I mentioned, and we look at about 25 frontier economies in JP Morgan, I mean, it's a similar picture, right? Central banks have either stopped hiking or are close to stopping from increasing interest rates. There are a few exceptions, and those exceptions are exceptions where, let's say, either macro-financial stability concerns are more serious. Pakistan is one example. Or in some cases, there are program countries, like program meaning IMF program countries, like Serbia, it's example in that direction, or Egypt, where they still need to tighten monetary conditions in order to stabilize inflation and also kind of sustainably lower inflation, right? How does Ukraine fit in this picture? Well, I think, again, because Ukraine hiked a lot, I would say there is no need to hike further. The central bank is forecasting rate cuts, as your colleague as well had in the presentation. So that well might be the direction of travel in the case of Ukraine. But globally speaking, it's not clear, what's going to happen with inflation. In JP Morgan, we believe this inflation is in place, is going to continue. And also we believe that towards the end of this year, US economy is going to enter a mild recession. So in this context, yeah, I mean, it's reasonable to assume that rate cuts are coming globally, right? But there remains some uncertainties. One uncertainty is whether this disinflation is really sustainable, because like I said, it's mainly goods driven and energy, not really yet visible in services. And in services, the issue with services is that labor markets globally and also in this region remain tight, clearly not in Ukraine, right? But that's a problem. So maybe this inflation is not going to be sustainable. This is one risk. The second risk is one of recession. If we have a global recession, currently this is not the JP Morgan view, just to make it clear. I said it's just a mild US recession, but not a global recession. In that sort of a scenario, various frontier economies will again come under pressure, right? Because they need funding from abroad, and that funding might not be easily available, right? So these are kind of the risks. The baseline is rather constructive, let's say, but there are risks, and we need to be humble about what is going to happen on the inflation front, right? Because no one really expected inflation to increase so much, and now we are seeing this inflation, but let's be humble and kind of admit that we don't really know. And we don't really know whether inflation is going to fall, especially back to targets, let's say. So in the case of Ukraine, I think it's a bit different. Why? Because, like I said, the central bank is using the exchange rate as a nominal anchor. It's been successful. Inflation is coming off, not over a year ago, but like in momentum terms. So probably we're going to see this inflation. The question is indeed similar to globally. Are we going to see enough disinflation? And the other question in the case of Ukraine, I would say, is how long can the exchange rate be maintained as a nominal anchor? I think this was debated to some extent between Serhii and Denis. What I would say is that we have some experiences, again, in frontier economies. This is probably most relevant for Ukraine, where authorities opted for fixed exchange rate regimes for various reasons, right? I'm not going to discuss why that option was taken. And eventually they gave up, either because they decided to give up or because they were forced to give up. In the case of Ukraine, as you said, Hlib, it's a very different situation, right? It's a war situation, right? So there can be even more arguments for keeping the exchange rate regime as it is for maybe an extended period of time. But I think authorities should still consider options about what to do in the future regarding the exchange rate regime, because again, if we look at other emerging market economies, and particularly frontier economies, right, a fixed exchange rate regime is not sustainable eventually, right? There are various reasons why it eventually doesn't become sustainable. It's not something of immediate concern for Ukrainian policymakers, but I think it's something that should be kind of, let's say, discussed at least in the country. On the central bank side and the direction of monetary policy, like I said, I mean, it may well be. Currently, we don't have rate cuts in the case of Ukraine as a forecast, but clearly those can materialize if the forecast progresses as the central bank expects. And I'll stop here for now.
Thank you, Nicolaie. I have one question that also, two questions connected that could be also interesting to Denis. So in your opinion, JP Morgan opinion, when Serhii started his contribution, he said that while market participants are speaking about clear disinflationary paths, central banks are more cautious in bringing interest rates down. What is the opinion of JP Morgan, and what is your opinion for emerging market economies? Do you see this disinflation and including structural disinflation as a basic scenario?
We don't see inflation going back to targets, at least in 2023, but even in 2024. Across many economies, right, at the global level. So clearly, I would say we're not going back to what existed in terms of inflation prior to COVID, or at least we don't see that in our forecast. It might happen again, like I said, because we have to admit we don't understand very well inflationary dynamics. Serhii is right. Central banks are much more cautious. I mean, he's deputy governor, central bank, and we've seen yesterday the Fed, right? I mean, they were cautious as well. Markets have reacted much more optimistic around inflation dynamics, and also not just inflation dynamics, but also broad developments in the market, right? Sentiment is more positive. Market players expect significant rate cuts in various economies, right? So clearly in the market there is a bit more optimism, let's say, than a central banker. But for a central banker, I think that's just normal, right? I worked in a central bank as well, and that's kind of the main characteristic of a central bank. You have to be cautious, and you have to kind of wait and see that data kind of really supports a shift in monetary policy. In terms of frontier economies and what we expect there, I would say we have rate cuts in frontier economies in Latin America. Why? Because those are economies where central banks have reacted first. They hiked significantly, and they either have, in some cases, positive real rates, or at least on an ex-ante basis, right, with expected inflation. They do have higher real rates than either, let's say, what we see in Europe, or what we see in Africa, or even what we see in Asia, right? So that's a region which is a bit different. And because of that, I mean, we expect that rate cuts. Elsewhere, we don't really expect rate cuts in frontier economies, right? I mean, we see them, like I said, maybe hiking a little bit and stopping. And this is, again, similar to what National Bank of Ukraine has been doing for some time, right? They hiked and they stopped, and they said, we're going to maintain this until we think it's enough for inflation to come lower. And when it comes lower, we're going to cut, right? So that's more or less the view that we have for many frontier economies. Again, except Latin America, where we do expect some interest rate cuts later this year. But you have to put these things in context, like I said, right? I mean, the situation there is a bit different. They hike sooner, and real rates are in a different place relative to others in frontiers.
Yeah, and one small question, thank you on this. On the regional economy, like what Denis is in charge is like economic growth. Like, do you see in your revisions or forecast for the regional economy, do you see additional opportunities for Ukrainian exports, for example, like better terms of trade, for example, when we speak about those commodities that Ukraine exports or could export?
Yeah, I mean, on the metal and metallurgy side, right? I mean, Ukraine has suffered badly because practically not only it's not possible to export to the Black Sea, right? But the production capacity has been completely destroyed in important factories, right? So that's one big issue. In the case of agriculture, it's different. What my colleagues on the commodities teams expect, I mean, the prices for commodities are to a significant extent driven by global dynamics, but also China demand, right? Demand from China, even though now with reopening, is expected to be more on consuming, let's say, domestic services rather than importing a lot from the rest of the world. So my colleagues haven't really changed their forecast for various commodities to the upside on the back of China reopening. So I think it's a bit hard to argue that terms of trade for Ukraine are going to improve from that side. However, from the energy side, because energy prices have fallen, there is clear improvement for terms of trade for Ukraine. So I wouldn't say necessarily on the export side, more on the import side.
Thank you, Nicolaie. Денису дуже дякую за відповіді на питання в
And thank you, Nicolaie, and thank you very much for answering the questions into the chat. I just wanted to outline that Denis has answered that in the Q&A session. So there was a question. You can see that there are the questions for the answers to the questions by Serhii Moskvin, and there is the questions, the answers to the questions of 579. Thank you very much, Denis, for answering to that. And on the 579 programs, and we have seen the limitations for the financial support provided to these programs, and unfortunately I do believe that this is the question that we will have to discuss further on, Denis, in the framework of our work as well, because right now there are few mechanisms of the support for the businesses, and especially for the businesses that has been impacted by the military aggression, and I think that maybe we will organize this kind of discussion with the Ministry of Finance colleagues. Yes, I just want to add, there's only 579 program, and 579 is a continuation of the financial lines for the people that used to have these loans, but with a slightly different approach on the risks and the collateral and the grants. So basically, the state has now started the granting programs for the micro and small businesses, partly the medium businesses. And in 2022, we have started with our very modest opportunities, but it has given us the opportunity to launch our tool. And right now, we're offering our international partners to use this tool and to increase their liquidity with that. And we are talking about that with the EBRD, with European Investment Bank, with IFC, with USAID. We're talking about it with all of our key and financial partners. And additionally, we're working on that's possibly providing the granting program for the processing enterprises to create a better program with the highest limits. I just wanted to say that you can now apply for up to 8 million hryvnias of grant if it's not going to be more than 70% of the cost of your project, and the enterprise has to provide their share to that as well. We are hoping to increase the upper threshold, and maybe there will be up to €1 million of money, but still we wanted to change the grant part from the grant to loan, but with the discounted interests. That would have been also a good tool to stimulate the processing industry, because the war is the opportunity for us to continue developing our processing industry under the conditions of the limited opportunities. That will definitely help us to work on our liquidity as well. And right now we can see there are very good level of liquidity there right now. So the return of the investment, not traditionally 3 years as it used to be for most of the business investment, there is also the 12 months opportunities and 16 months opportunities, 18 months opportunities. So there's different business plans that we have seen as the ministries, and we have seen the really good return. So we're working on that as well. Thank you, Denis. Thank you, dear colleagues. So I think it has been a very interesting discussion for all of us, and we have covered a couple of the topics that we will continue to develop further on. I just wanted to once again remind you that our presentation of a monthly review is available at our website, and you can see the link in the chat, and you can always go to the website of our social media. We're really grateful to the colleagues from the Ministry of Economy. We're really grateful to Denis Kudin, the first deputy of Minister of Economy, for your position. We're really grateful to the colleagues from the National Bank, to Serhii that has been with us, Hlib Vyshlinsky that has joined us. And we're also really grateful to our colleagues from the German economic team for their support. We are going to meet, hopefully, when we're going to have 2 monthly events, because we wanted to conduct this event by the end of January, but due to all of the really tight schedule of all of our colleagues, we needed to postpone this for January, but we will continue our discussion after the 20th of February. I hope we will all have calm and peaceful evening and night. Thank you very much, and hope to see you soon at our following meetings. Thank you.
Thank you.